Why are tech stocks taking such a nosedive? What's behind the surging interest in rare earth metals? We break down the latest market shifts, including rising unemployment risks and intriguing opportunities in natural resources. Experts weigh in with their predictions, from recession fears to the surprising potential of AI in tackling economic challenges. Don't miss out on key insights that could shape your financial future. Like and subscribe for essential updates. Today, on Financial News in Review, we will summarize the following videos. From Adam Taggart Thoughtful Money, we have It Will Feel Like a Recession when unemployment hits 4.5% by year-end, Bloomberg's Anna Wong. From Blockworks Macro, we have Airline revenues are soaring. Their profits are not, planes and trains expert Jay Shabat. From Kitco News, we have Rare Earth Metals, the next big opportunity. Here's what you need to know. Rick Rule. From David Lynn, we have Is Earth Running Out of Gold? Will Price Skyrocket? Michael Henrichsen. From the Julia LaRoche Show, we have Can AI Fix Our Debt Problem? Tyler Cowen. Welcome back to Thoughtful Money. Today, Adam Taggart sits down with Dr. Anna Wong, chief U.S. economist for Bloomberg Economics. Anna brings an impressive resume. A Fed veteran, former White House Council of Economic Advisors member, and someone who's worked at the U.S. Treasury. Today, they'll tackle the big question. Is a recession lurking around the corner? Anna Wong asserts that while the U.S. might technically avoid a recession by some definitions, for many Americans, it will certainly feel like one. With unemployment predicted to hit 4.5% by the end of the year and various economic pressures in play, the sentiment of an economic slowdown will pervade daily life. Here are the key points discussed by Dr. Anna Wong. Geopolitical risks. Anna stresses the unpredictable implications of rising U.S.-China tensions, especially if Donald Trump were reelected. Specifically, tariffs on China could impact major companies like NVIDIA, which relies on supply chains from Taiwan and Israel. Market and economic predictions. With final Q1 GDP growth at just 1.4%, the sluggish economy could face even tougher times. Retail sales and unemployment stats all hint towards a rocky economic period ahead. Monetary versus fiscal policy. There's tension between tight monetary policy and expansive fiscal spending. Government deficit spending is running high, fueling debate on sustainability as both sides of policies seem at odds. Dr. Anna Wong made the following predictions. Rising unemployment. Anna predicts the unemployment rate will reach 4.5% by year's end. Though this rate doesn't fully confirm a recession by traditional standards, it will feel like one for many. Interest rates and inflation. Inflation might not hit the Fed's 2% target until 2026. Sticky inflation in healthcare and home insurance sectors will contribute to this prolonged struggle. Dr. Anna Wong provides a cautionary outlook for the U.S. economy, predicting that while a technical recession might be dodged, it'll feel like one for many Americans. Unemployment is key, expected to rise to 4.5%, and inflation will remain a significant challenge. The advice? Brace for impact and prioritize risk management in your financial plans. Welcome back to Forward Guidance on Blockworks Macro. Today's episode is a thrilling ride through the rails and skies with our special guest, Jay Shabat. Jay is an expert analyst with Skift Airline Weekly and the mastermind behind the Railroad Weekly Substack. As you might have guessed, Jay knows all things about trains and planes. Buckle up, folks, because we're exploring why airline revenues are soaring, but their profits, well, not so much. The core thesis of today's discussion centers around the airline industry's paradox. Despite record-breaking revenues, profits are not taking off as expected. Jay Shabat dives into the intricate dynamics of the airline sector, addressing everything from rising labor costs and supply chain disruptions to the competitive landscape of the railroads and the continued advent of nearshoring. Here are the key points discussed by Jay Shabat Railroad Industry Overview. Rail freight demand is up about 2% in volume terms, though it's a mixed bag compared to the peak in 2018. Coal decline and weak manufacturing are significant factors. The 6 major North American railroads remain highly profitable, with operating margins typically around 35-40%, a stark contrast to the less profitable airline industry. Intermodal and trucking market. Domestic intermodal trucking market is hurting due to overcapacity, which has made pricing highly competitive. International intermodal market shows positive growth, reflecting ongoing strength in consumer spending and logistics shifts due to global trade disruptions. Airline industry dynamics. Strong demand for air travel, particularly for premium and international routes, is juxtaposed with significantly rising labor costs. Supply chain issues for aircraft from Boeing and Airbus constrain supply, indirectly supporting higher fares. Labor costs and industry impact. Airlines like Southwest and Delta have seen labor costs increase by around 49% and 44% respectively since 2019. The industry faces acute pilot shortages, adding to the cost inflation. Shabat made the following predictions. Continued airline supply shortages. The aircraft supply chain issues are expected to persist until 2029, supporting continued high fares and constrained capacity. Mixed financial fortunes. Delta and United may continue to benefit due to their international exposure and premium services, contrasted with domestic low-cost carriers like Southwest and Spirit, facing greater challenges. Shabat's session enlightens us on why airlines, despite high revenues, struggle to keep their profits soaring due to labor and supply chain issues. Meanwhile, the railroads, though facing mixed demand trends, remain powerhouses of profitability. The key takeaway: keep an eye on industry dynamics and look out for policy changes or economic shifts that could impact these sectors. And remember, understanding the nitty-gritty like Jay does could give you the edge when navigating investment decisions in these volatile yet fascinating industries. Welcome to another exciting episode of Kitco News. Reporting straight from Boca Raton, Florida, we're at the Rick Rule Symposium on Natural Resource Investing. And guess what, folks? We've got the legendary Rick Rule himself. A true maestro in the realms of natural resources and investments, Rule is here to drop some wisdom and laughs. This episode is all about understanding the potential boom in rare earth metals, a market that's rarer than your chances of finding a unicorn. Rick Rule delves into the burgeoning opportunities in the rare earth metals market, emphasizing its growing importance in technology and green energy sectors. Despite being challenging to understand, Rule asserts that rare earths are set to become significant players, especially given their complex geopolitical dynamics and environmental considerations. Here are the key points discussed by Rick Rule. Investor optimism and due diligence. Rule attributes investor optimism to thorough due diligence taught through his educational platforms. Emphasizes starting investment evaluation with the quality of the people behind a project. Understanding rare earth metals. Rare earth metals are pivotal in numerous modern applications, especially in green energy and technology. Despite being called rare, they are not scarce. Their supply has been predominantly controlled by China due to their cost-effective production methods. Geopolitical and environmental factors. Rule highlights the shift in production strategies due to environmental and geopolitical pressures. China's stringent environmental norms are set to increase the cost of rare earths, opening opportunities for other countries. Practical investment advice. Rick emphasizes the importance of evaluating companies based on their processes and potentials, rather than just current market prices. Investors should focus on the long-term value and expected outcomes of exploration companies. Rick Rule made the following predictions. Rare earth market boom. Rule predicts an increase in the importance and value of rare earth metals due to rising demand and stricter environmental regulations in China. He believes that other nations will notice and begin more exploration, leading to a diversified rare earth market. Increased M&A activities. Mergers and acquisitions are expected to rise in the mining sector, aiming to reduce administrative costs and enhance capital allocation efficiency. Larger, well-structured entities will have better market liquidity and capital costs, making them prime candidates for successful consolidations. Rick Rule wraps up by reiterating the promise held by rare earth metals, urging investors to focus on solid due diligence and long-term strategies. He advises diversifying investments and warns against reacting to short-term market fluctuations. Keep your eyes on the long game, folks, because that's where the real treasure lies. Welcome back to David Lin's channel. Our guest today is Michael Henrichsen, CEO of Goldshore Resources, with the ticker GSHR, on the Toronto Stock Exchange Venture Exchange. Goldshore has seen a jaw-dropping 100% increase in stock value this year, outperforming gold. Michael brings his extensive experience from Newmont, the world's largest gold producer, to discuss the outlook on gold and share his strategic roadmap for Goldshore's future. The main thesis of today's discussion focuses on the concept of peak gold and the challenges associated with discovering new gold deposits. Henrichsen emphasizes the increasing difficulty in finding Tier 1 assets and the importance of focusing on strategic, low-risk jurisdictions like Canada for future gold exploration and production. He aligns this with Goldshore's future plans and growth prospects. Here are the key points discussed by Michael Henrichsen: peak gold and exploration challenges. Discovery of new gold deposits is becoming tougher, as many easy-to-find deposits have already been identified. The rate of new gold discoveries is declining, suggesting that we could be approaching peak gold. Henrichsen highlights the importance of being in safe, politically stable jurisdictions like Canada compared to challenging regions like West Africa or parts of South America. Criteria for successful gold projects. A major gold producer looks for deposits with over 5 million ounces in Tier 1 jurisdictions, ensuring substantial returns and manageable regulatory environments. Henrichsen discussed Goldshore's flagship Moss Gold project, which boasts a resource of 6.7 million ounces and excellent infrastructure in Ontario, Canada. Goldshore's growth and strategic backing. Goldshore's stock surged due to its fundamental undervaluation and strategic investments. Support from the SAF Group and financial stability through strategic backers has allowed Goldshore to rise above typical junior mining issues. Michael Henrichsen made the following predictions: future of the Moss Gold project. Henrichsen projects that the initial preliminary economic assessment, PAA, will be a key milestone to define the asset's value by Q1 2025. He anticipates further growth in the project's resources, with potential new discoveries around the existing deposit. M&A activity in the gold sector. Henrichsen sees an upcoming M&A cycle as major gold producers are cash-rich and looking for high-quality projects to acquire. Goldshore, with its strategic and scalable assets, positions itself well for potential acquisitions. In conclusion, Michael Henrichsen emphasizes the increasing challenges in gold discovery and highlights Goldshore's strong position due to its strategic location and significant backing. Viewers and potential investors are encouraged to keep an eye on Goldshore's upcoming economic studies and exploration results. Hey there, and welcome to the Julia LaRoche Show. Today, we've got an exciting conversation lined up with none other than Professor Tyler Cowen. If you're not familiar, Tyler is the Holbert L. Harris Chair of Economics at George Mason University, Chairman and General Director of the Mercatus Center, and he's also the co-author of the popular economics blog Marginal Revolution. Oh, and did I mention he hosts the podcast Conversations with Tyler? Today, Tyler will be diving deep into the burning question: can AI fix our debt problem? Buckle up, it's going to be a thrilling ride. The core thesis revolves around the transformative potential of AI and its impact on productivity, the job market, and notably, the management of national debt. Tyler argues that AI is set to revolutionize several industries, leading to significant productivity gains, which can, in turn, make the U.S. debt more manageable. But it's not all rose-colored glasses. There are big societal shifts and global risks to consider. Here are the key points discussed by Tyler Cowen: AI and productivity gains. Tyler predicts that productivity growth rates will increase due to advancements in AI and biotechnology. Minor companies with significant potential, like Midjourney with just 9 employees, exemplify the change in optimal business size. Evidence: Tyler alludes to the rapid pace of AI advancements and their forthcoming impacts in just 2 years. Challenges and global risks. Heightened international conflict risks, e.g., Ukraine and Taiwan. Uncertainty about AI's societal acceptance and the restructuring of education systems. Evidence: mention of recent wars and the emotional divide over AI-driven learning and employment. Future of work and education. Tyler envisions a future where AI assists in job functions, creating new roles while making others obsolete. Education will shift towards teaching students how to collaborate with AI, with homework becoming less relevant. Evidence: Tyler's own experience integrating AI into his classrooms at George Mason University. Tyler Cowen made the following predictions: economic growth and debt management. Tyler is optimistic that AI could help the U.S. achieve a higher growth rate, approximately 3% annually, making debt management much more feasible. He believes that the increased productivity from AI will help offset the current and growing U.S. debt. AI-driven economic transformation. Expect significant changes in the labor market, with AI taking over repetitive tasks and creating new roles in human-centric fields like hospitality and the arts. The progress in biotechnology and AI will potentially extend lifespans and reduce healthcare costs, impacting public health positively. Wrapping up, Tyler Cowen's insights paint an optimistic yet nuanced picture of the future. AI has the potential to drive immense productivity gains, positively influencing the U.S. economy and its ability to manage national debt. However, it also ushers in significant societal changes, requiring adaptation. The takeaway? Embrace AI, keep learning, and stay adaptable. For more intriguing ideas, don't forget to check out Tyler's blog, Marginal Revolution, his podcast, Conversations with Tyler, and his various books. Keep those human connections strong, because future is a blend of high tech and high touch. Throughout the videos, our experts like Dr. Anna Wong and Jay Shabat presented different angles on the current economic climate. Dr. Wong predicts a significant rise in unemployment, which may not qualify as a technical recession, but will feel like one for many Americans. Jay Shabat noted the high airline revenues, but stressed the lack of corresponding profits due to labor and supply chain issues. Rick Rule and Michael Henrichsen highlighted opportunities in the booming rare earth metals and gold markets, driven by geopolitical and environmental factors. Meanwhile, Tyler Cowen emphasized AI's potential to enhance productivity and debt management, albeit with significant societal shifts. Despite their nuanced perspectives, all agreed on the importance of strategic, long-term investment and risk management. Points of contention include the focal investments. While some advocate for commodities like gold or rare earth metals, others see technological advancements as the key to future profitability. Thanks for watching Financial News in Review for July 11th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.